Right. Good evening, everybody, and welcome to this webinar. My name is Arun, and tonight I will be talking a little bit about the budget that was announced yesterday. This well-anticipated budget that I think is probably the most anticipated budget we've seen in a number of years as a result of the Labour government. And boy, was it a budget. Okay, so I'm going to go through some of the key salient points that will be impacting most businesses, including dentists. And I guess it's kind of come on a funny night tonight. Tonight is actually Halloween, so if anyone who's wanted to go out trick or treating, I'm sorry. This is a budget from Halloween, I guess. In addition, coincidentally, it's actually Diwali today. So anyone who is celebrating Diwali, happy Diwali to you guys. I do actually celebrate Diwali, but I actually thought it was going to be tomorrow. But with the way the dates work with Hindus' calendars, it's never quite sure when it's going to be. So I have a house full of people turning up in the next half an hour, screaming teenagers, a dog that wants to be entertained, and then some other guests as well. So bear with me, okay, if you hear lots of noise in the background. But I will try and get through all of this information as quickly as possible and just highlight the salient points. Today, these are just the salient points. Obviously, if you need specific advice, please do reach out when you need to. So let's crack on. And that's the dog probably barking at some guests who've just turned up. So anyway, right. So here we go. Wrong slides, wrong one. So as you can hear, that's the noise. Just bear with me a second. Let me get rid of those people. So, right. For those of you who don't know me, I've been in the dental game for almost over 20 years, 22 years. I'm the owner and CEO of Samara and CEO of Samara Global as well, which is an accounting offshoring firm which helps other accountancy firms. I'm also the co-owner of the Neem Tree Dental Group, private dental group. So everything that I kind of talk about, I actually feel and experience myself. My wife's Mita is a principal dentist. So everything we've always done has always been about trying things out ourselves, okay? So as I said, 22 years, I'm a trained chartered accountant with PwC, and we used to work in investment banking. So that's a little bit about me. But before I want to just crack on and really go into the depths and details of what this is all about. So what were the major changes that were announced? So employers' national insurance was one major change, which I'll come on to in a minute. CGT, capital gains tax, which will impact anyone who's looking to sell their clinic or sell any assets. In personal tax or income tax, which I'll talk about in a little bit of detail, not significant changes there. Some significant changes in inheritance tax. And then, as we know, the national minimum wage has risen as well. So I'll go through each of these in a few minutes and just run through each of the key points. So let's start with national insurance. So those who are self-employed, so those are people who are maybe associates or a sole trader business, actually no significant change here. Actually, this is probably the only good slide I've got in the pack. So I thought I'd start off with the good news. No change from 25-26 for either class 4 or class 2. So that's kind of the good news. But it really kind of goes downhill after this. And this is for employees. Now, I suppose you remember, actually, just bear with me a second. Let me just make sure these people are quiet. Hold on, just bear with me a second. I'm going to mute myself. 1 second, sorry. Apologies about that. I think everyone's getting too excited. It's Diwali and wanting to eat laddus and everything. So for employees, this was a big issue before the budget. It was announced that there was going to be no impact on working people. And I guess that's the case here for employees. The lower earnings limit for national insurance for employees has not changed. Neither has the upper earnings limit. So there's no change effectively for anyone who's employed. The sting in the tail really comes for employers. And what we've seen is a massive change, okay? So the threshold previously for employers was £9,100, and that's for this year. But going forward for 25, 26, it'll be 5,000. So previously, you wouldn't pay any national insurance if you were earning below 9,100. But going forward, if it's over 5,000, now you'll start paying national insurance. And it won't be at 13.8%, it'll be at 15%. So that's a big rise, okay? 1.2% in real terms. However, I guess the only positive here in that respect is they've increased the, you can't really see that properly, but the employment allowance is increased from 5,000 to 10,500. Now, what we've seen is the thresholds were frozen until 2028, but now, not beyond this time. After 2028, they'll be increased by inflation. The plan by the government is for them not to increase taxes on working people. And then employers' national insurance. I suppose the good thing that didn't happen, they didn't announce any employers' national insurance on pension contributions. So if you have a company and you're paying into a pension, say of your own pension, before you don't, even now, okay, and even going forward, there's not going to be a national insurance contribution on that, which is actually probably a good way of taking money out and topping up your pension if you're thinking about these things. Now, the net effect of all of these things, and there's various calculations out there, but roughly for someone that it's going to be about anything between £600 and £900 per person additional charge of national insurance if you're an employer. Now, this will vary depending on how many employees you've got, the salaries that you pay them, but ballpark between the £600 and £900 per person. So not good. Okay. Now, what may come out of this is that people might start thinking, well, I'm going to pay my staff through various salary sacrifice schemes, which may be possible, and we can look at that at another date. But that means they may not attract national insurance, such as pensions, for example. So an employee, you might say, I'm going to pay them more pension, pay a larger contribution to their pension, not give them a pay rise, and therefore they'll benefit and you'll benefit as well by not having to pay such high national insurance. But all of these things are open to discussion, open to kind of interpretation. So national insurance, not good for employers. In addition, which was probably announced just before the budget, I think the day before, we've seen a rise in the national minimum wage. Okay, so for apprentices, from April, it'll go up by £7.55 and under 18s to £7.55. 18 to 20-year-olds up from £8.60 to £10, and 21 and over to £12.21 from £11.44. Now, those are the increases. Okay. Now, if you had someone on if someone is going to be on the national minimum wage from April 25 compared to April 24, obviously the salaries increased by 6.7%, as you can see on this table here. But in addition, we're seeing with the increase in employers' national insurance liabilities, the actual real term increase to an employer is 10.6%. So you can see it's just about £2,400 increase in this instance for an employer, which is the double whammy of increasing the national minimum wage, but also increasing the employer's national insurance. So, of course, it's a good idea to increase national minimum wage. I guess everyone wants to earn more and do better, but couple that with the employer's national insurance for any company paying that, it's a sting. Okay, I appreciate that, and it's not a nice sting ultimately. So that's kind of national insurance. Before I talk about capital gains tax, so national insurance now, as I said, in summary, will be 15% pretty much going forward. And you just think about it, that's 15% of the salary that you're paying a team member once they're above the threshold of that £5,000. And that's a lot of money. Okay, 15% is going to national insurance. And they say that's going to fund the NHS. Hopefully it will, and it'll do a good job. But me being a skeptic and perhaps me being a cynic, will they actually use that money effectively? That's the key question. Now, moving on to CGT. Right. So we have an annual exemption now of £3,000, but what we've seen now announced yesterday are some changes in the rates, okay, in the rate bands. So 10% it was prior to yesterday, okay, that the basic rate band for capital gains tax. Now that has risen to 18%. And going forward, it will be 18% for the basic rate tax band. Above the basic rate tax band, then you go to, it'll go from 20% to 24%. Now, big changes here. So in addition, one of the big benefits, and this is capital gains tax applies to people who want to sell their business. So for anyone who owns a clinic, this is where the impact will be. And I'll do a worked example in a moment. There's something called business asset disposal relief. So you currently get, and basically up until yesterday, you would have got a lifetime limit of £1 million, and you'd up to that limit of £1 million, you only pay 10% CGT. After that, you pay the balance at the main rates. And yesterday it would have been at 20%, 10% and 20%. Now going after October, now things have changed, and going into 25, 26, the lifetime limit at 1 million will be at 14%, and then in 26, 27 it'll be at 18%. So CGT is on its way up. So for anyone thinking about selling their business, this could have it'll impact it sizably. Now, the question you have to think about is: are you imminent? Are you looking to retire immediately? Are you looking to sell immediately? Are you looking to, I suppose, exit soon, or maybe, as people have been talking about, I suppose I've been reading today, is that will this government actually last for the next 4 or 5 years? Will things change after 5 years? Who knows? No one can predict these things, but as a Labour government stands now, over the next 4 or 5 years, these are the rates. Okay. Now, if you can hold on, things may change after 5 years. Now, this may slow down M&A and activity in the longer term. I think this may actually speed up M&A activity up until April next year. Okay. But after April next year, things might actually slow down of M&A. But I'm just hypothesizing at this stage. So if I go through a worked example here, imagine you've done well, you built a practice, and it's £5 million practice value. And these are just worked examples, so just bear that in mind. These are just very rough figures. In 24, 25, okay, up until if you applied a business asset disposal relief, you'd get £100,000 tax would be, and the remaining £4 million would be taxed at 20%, which would be £800,000. So the total tax would be £900,000 on a £5 million sale. After 30th of October, i.e. yesterday, that bottom figure has gone up to 14%, so from 800 to 960. And as you can see, going forward, 25, 26, if you're selling your business, your tax bill would be 1.1, and in 26, 27, it would be 1.14 million. So rising over the next few years with CGT. Now, what we might see is more activity over the next 1 or 2 years, as I said, but 26, 27, then it will probably kind of plateau at that level. Now, in this example, the net increase is around 27%, from paying 900,000 to 1.14 million. A sizable change, okay? And that's in real terms, in this example, that's what, £240,000, a lot of money. So again, not so attractive, okay? Now, I'm of the age, I'm in my 50s, early 50s. If I wanted to sell a business, it might be in these next 5 to 10 years. But I think with these capital gains tax rates, doesn't make it so attractive. So you might be thinking about, do I hold on now for a little while longer? I don't know. But this is the reality of the situation. CGT has gone up. Then, right, inheritance tax, next tax, plowing through these. No changes to the tax rates, which I guess is good news. So that still remains at 40%. No change to nil rate band at 325 for an individual, and another £175,000 on top of that if you have a permanent a residence as part of it, and you're going to give that to your children or your grandchildren. So they haven't moved the bands up either. So it's still quite low, and these bands have been around for donkey's years. So maybe for at least over 10 years. It would have been nice for them to move up, but of course they didn't. They want money. Now, what's also been caught by the inheritance tax is unspent pension funds subject to IHT. So what this means is people who have a private pension, previously, a private pension would have been outside of inheritance tax, so that wouldn't be caught up in the estate value. Now it's going to be inside the pension. So if someone dies and that pension is going to someone else, to being given to the next generation or whoever, that'll sit within these bands. And that could have quite a big, actually could have a very big impact, not a big impact, a massive impact, okay? And now that's effective from April 27. But so the opportunities to plan for inheritance tax are increasingly limited. Potentially, the best way is by trying to give assets away over a period of time, and hopefully you survive those 7 years, and then your estate or your won't have to pay any inheritance tax. And that's something that you have to think about and plan this going forward effectively, and be smart about it. Obviously, if you've got assets, let's say you've got properties, you might want to give those away to, say, your children or grandchildren, but that may also trigger a capital gains tax, as we highlighted earlier. So gifting an asset to a child ultimately will mean capital gains tax will be charged, because the market value of the property would have to be used when working at those figures. Okay, so they're all coming into play. They all intermingle, all these taxes, unfortunately. So if they don't get you with one, they'll get you with another. In addition, something that if you're a business owner or own farms, and you never know, I do have some clients who are dentists who actually do have farms. There's also the business and agricultural asset relief, okay, that you get. Now, again, on inheritance tax, the first 100%, well, before it was always, the first million was 100% deductible, okay? Now going forward, after that 1 million, 50% of a deduction. So if you just look at this estate, I've just again shown these numbers here very roughly. If you had a business, and as part of that business, part of the estate, the whole business was for sale, and it's worth 5 million quid, and you claim £1 million of business asset disposal relief, the net effect in this example is tax at 40%, a £400,000 inheritance tax bill. So again, high taxes. Now, one way to mitigate this is potentially to take out life insurance policies to cover any inheritance tax down the line. But again, it's a catch-all. They're trying to catch everybody with this tax of inheritance tax. So far, it's been pretty negative news thus far. We've talked about employers' national insurance, capital gains tax going up, and now further people being caught into the loop of inheritance tax, particularly around the pension side of things, I think. And for those who do own a business, again, not such attractive inheritance tax terms now. Moving on to personal income tax, I suppose the good thing here, and you can see the numbers here, they haven't changed. Okay, personal allowance remained the same. The starting rate for savings remain the same. Basically, everything stays the same. But what that also means is the thresholds remain the same. So all the allowances are frozen until 2028, and then will rise with inflation. So that means as people's pay rises go up under the fiscal drag, ultimately they'll be paying more tax because the bands haven't moved with the rate of inflation on their pay. So again, and this is a continuation of what the Tory government did. They had fiscal drag in place, never increasing the personal allowance or any allowance levels. And that's now just continue under this Labour government, so they can catch more money as more salaries go up. So no change. And then I suppose the only positive out of this whole income tax side of things, there was no change in dividend tax rate. So for anyone who has companies and they're paying themselves through companies, it may well be a combination now of paying yourself higher dividends. You might not want to, you might still need cash out of the business, but you might reduce your salary even further because of employers' national insurance. If you want to top up your pension, that may be an angle to to top up your pension. You might want to try and look at salary sacrifice schemes in place for you or your team members. So all in all, not great. So those are the taxes. I know a lot of our clients also then have children who are in private school, and VAT rules, you're probably aware of this already, but they are going to be triggered from the 1st of Jan. So another 20% on any private school fees. Luckily for me, my kids have just left private school. One left and one's gone to one's at university. So I suppose I benefited from that. But what they've also highlighted is an anti-forestalling rule. So any advance payments made before July 29th, before it should be actually, I should read actually, after 29th of July 24 would trigger a VAT charge anyway. So for some people who might think, well, I won't pay the VAT if I pay lump sums in advance. I won't need to pay the 20% VAT. Unfortunately, that's not the case anymore. The ruling on the 29th of July 2024 means now that you have to pay the VAT anyway. Okay, it's all based on school term dates. The only exceptions here are nurseries and any special types of school. The definitions of those I can't remember now, but there are specific special types of schools out there. So there are other aspects that are part of the budget. There are other calculations that can be done, but every situation, every scenario of every person I've dealt with over the years has a different unique situation. Some might be starting out in their career. Someone might just bought a clinic or setting up a clinic. Someone might be looking to exit, okay? And someone might be looking, a family member who might be passing away, who has passed away. The tax seems to catch you at every level, okay? They always say, there's only two certainties in life, death and taxes, and this budget has certainly highlighted the taxes side of things. We've got this whole, from beginning to end, income tax because of fiscal drag in place, even though they didn't increase the rates, fiscal drag, that will catch more people. Capital gains tax for anyone wanting to sell a business or sell an asset, higher capital gains tax rates. One of the things I haven't mentioned here, but I will mention, is stamp duty land tax rates have gone up as well as of yesterday for anyone wanted to buy a second home. From 3% it was before, now it's 5%, and that went on overnight. We've had the IHT inheritance tax gone up as well, with the change in rules, particularly around the pension side of things. And then finally, and probably the biggest one is that they're talking about is where they'll raise most money is from the employer's national insurance payments. And if you read the press today, they're saying they're not even sure whether that will cover sufficiently. And there's a concern by the markets that the next year the Labour budget or the Chancellor might come back and say, right, we're going to have to raise taxes even further. Okay, so it's not good news from anyone who is worried about taxes. So there's a whole swathe of things happening here. In addition, those are the taxes. One of the things that it wasn't announced in the budget, but if you look in the details of the reports out there, making tax digital has been confirmed that's going to happen, and that means for anyone earning over £50,000 per year from trading or property, they'll have to do quarterly reporting to HMRC and pay tax each quarter, and everything will need to be digital. So everything needs to be on some software. So things like Xero or QuickBooks, that type of thing, they'll be able to do it, and that's something we're pretty much geared up to do. But that's going to hit everyone who earns over £50,000 from any trading or property. So for instance, a dental associate, for instance, would be impacted by this example. And at some point in the future, the limited companies will happen. They'll have to be going down this route as well. So no clear guidance on this yet, but they've kind of reinforced the message that they're going to do it. And the reason why they're doing it is because they can get more money up front. So if you're having to report quarterly, you're going to have to pay your tax quarterly and make payments quarterly, and then they give the government better cash flow for themselves. So that's the true reality of the situation. So my view, I've probably expressed it already in my kind of discussion here on these last few slides. Initially, when I was listening to the budget yesterday, it didn't look too bad, okay? headline number increases from 1.2 to of 13.8 to 15%. It was an increase of 1.2%. But when you actually look at the detail, combine that with national minimum wage increases, combine that with the employment allowance, whilst that's going up, the threshold goes down. The threshold catches a lot of people out. And that's when they're going to try and make, I think, around £25 billion just from national insurance. And that's the hit is going to be on employers. Now, what does that mean for employers? They're going to have a greater cost. Where are they going to find that money from? Where would a dental clinic find that money from? It could mean they'll have to increase fees if they can. They might have to get rid of a staff member if that's the case. There's a variety of things that may have to happen. The danger of this budget is that there's talk of people might not even actually hiring might slow down. So we shall see. In addition, M&A activity, as I said, it may pick up over the next few months because of CGT rises coming soon. But what impact will this have on valuations? And I think the impact might the sales process might slow down a little bit further down the line, and I think valuations might come down as well because ultimately there's greater costs in the business, therefore a lower valuation for the business. But in a nutshell, I think the national insurance rise is the biggest impact, and ultimately, if that impacts an employer, impacts a business, that reduces the profit of a business, which ultimately reduces the valuation of a business. So all in all, not great for any business owners in particular. For employees, okay. But for employees expecting pay rises, that might slow down or reduce as well because the company or the organization has to suffer greater costs. So the question to ask is, I suppose I'm just thinking kind of logically, is how can I grow my business in this tougher tax environment? And I suppose that's the question I've had already. How can I grow my business in this tougher tax environment? And it's not going to be easy. Okay. So you're going to have to be, have some commercial nous. You're going to have to be flexible. You're going to have to be adaptable. You're going to have to look up your business in various elements. One of the areas is to grow the top line. Easier said than done. It might mean better, more effective marketing, getting more customers, changing your prices, offering new services, all of these things. Okay. And that's an important area to think about. How can I grow my business? And I think new services or price rises, and they will have to be cleverly done because you don't want to raise your prices and then see demand drop. Okay. And you've got to be competitive at the same time. You've also got to identify other areas you can reduce costs, maybe through automation, through technology, or through outsourcing and offshoring work overseas. So I know clinics now where we support, to be honest with you, where we provide bookkeepers full-time working for them overseas. These are some of the larger groups, and they work overseas because it's cheaper. It's a lower cost. We can do that. We also have clients who are using video services and marketing services from our team overseas. So various things out there where you're going to have to do this. And we kind of foresaw these costs and taxes rising a number of years back. So we've got a team in place to support anyone who's looking for some of the more admin and financial and marketing types of roles out there. So get in touch if you need any help on that. But finally, I think ultimately you as a business owner now have to think of the drives of your business and focus on how to grow. The tax is here. We're all going to suffer it. We're all going to have to pay it. But the smart ones will think, okay, it's there. There's not much you can do about it. It's thinking, what are those drivers which I can change? What are the levers that I can move within my business where I can reduce costs, grow revenue? What are they? And that means looking at things in a much, much more strategic point of view, but also having the detail, understanding the numbers is so, so important now. So how can we help? Okay, I've been talking for 30 minutes. There's tax planning. We can do looking at sole trader versus limited company as an option for whether you're a group, one dental practice, or you're an associate. But over the years, we've been helping people put groups together to help them restructure, which then can help offset losses in one business to profits in another business. Various things to look at there we can do. One of the big areas now that we really focus on is getting to grips of your numbers. As Making Tax Digital is coming, as I mentioned earlier, it's so imperative to know your numbers. So your bookkeeping is up to date and accurate. It's not done by some nurse or practice manager sitting behind the scenes when they can get down to do it. You need to know your numbers. You need that management information, and you can use technology to really manage and smooth out the finance function. And it can be very, very well. It can really help your business. So there's not much we haven't seen in the last 22 years. We've seen tax rises, we've seen tax drops, we've seen interest rates go up, we've seen problems in clinics, we've seen practice valuations go up, valuations come down. We help practice owners, associates, we help groups that are multi-million pound groups to dentists just starting out. So we have this real in-depth knowledge of the whole dental sector. And I think really, if I look to myself, and we also having our own clinics has given us a significant edge, because we know what works and what doesn't work. So if you need any help on any of these aspects, on the financial side of things, but even the marketing side of things, we can certainly potentially help. You can book a call with me on the following link. As you see, there's not much I haven't seen in practice. I will share a link, something here now. I'll just add something else to the thingy. I have put a page in. I'll just share this link as well. Two things. It's a service that we're offering to dentists, okay, where effectively we basically run the whole finance function for clinics, okay. We provide advisors, dedicated team of experience, of team of 3, bookkeeping, tax planning, tax projection, cash flow, financial statements, business advisory, personal tax, you name it, payroll, you name it, pensions, year-end accounts, KPI, we get it all. So we have the team now, we have a structure in place. You'll have a dedicated team of people specializing in their domain to help you understand your business and run a better business. So if that's of interest, please do get in touch. It'll vary from size of clinic, but that gives you an indication of a rough price. It might be slightly more, it might be slightly less, depending on the size of clinic or if you're a group or something. And then the other thing I want to share with you is, I do have another, I'll stop that one. I do have another link I just want to share with you, which is this one here. This is our learning center on our samera.co.uk website, and you can literally bear with me, I'm just trying to share it here as well. You can see we have so much information about accounts and tax stuff for associates, for practice owners. We're adding to this all the time. There's tax ideas, tax tips. There's a wealth of information on here. So I'd encourage you to go through it. Come back to us if you need any help. But in summary, I think it's a challenging tax environment. I think we kind of expected it to some extent with the way the government is and the way the finances are of the country. But my message to everybody is don't kind of let it get you down. You may be starting out in your career, you may be running a clinic, you might be running multiple clinics. Of course, there'll be costs, additional taxes and stuff like that. But don't put your head in the sand, okay? You can't control that now. The taxes have been put into place. You can't control that. And the opportunity to minimize tax is quite limited now, especially in this regime that we live in now. But you can still vary other things. You can change your marketing. You can get a new website. You can change your prices. You can do a variety of things and seek out help and advice. Myself, my team, we're all available to help. So if you need any support, please don't hesitate to get in touch with us. Okay. Dentistry is still a great career, a great industry. It just needs some support, and you just need to understand the numbers better. If you understand the numbers better, you can still do not just well, really, really well, and the tax consequences can be mitigated or reduced, I suppose, significantly if you understand your business better. If you've got any questions, please do fire away at the moment with me now if you want to. I'm not sure if anyone's got any questions. I appreciate it's a Thursday night. and it's Halloween, and I've got a Diwali guest turning up. Okay, there's a question here. Is there any truth to the rumors of public sector being exempt from national insurance increases? I haven't heard anything of that. Okay, pretty unlikely, because NHS practices ultimately will be they're private enterprises. So my guess is no. Okay, I haven't seen anything elsewhere, and I think they would have highlighted that yesterday. Like, for instance, the business rates, they highlighted yesterday that leisure and hospitality, they would have been exempt or reduced business rates. But nothing was mentioned for public sector. But I haven't heard anything as yet. So, but maybe we can look into that a little bit further. Any other questions out there whilst I've got you here today? No, doesn't look like it. So what I'll do, I'll leave you to it. Thank you so much, everybody. Have a lovely evening, and please do reach out to me if you need any help, and we will go from there. Thank you. All right. Good night.